In your market news now, most Asian equities and currencies retreated as Chinese Parliament's annual session kept investors waiting for substantial policy measures to stimulate growth in the world's second largest economy and the region's largest trading partner. Meanwhile, U.S. stock index futures dipped as investors awaited a slew of economic data in several key events this week, including appearances from Fed Chair Jerome Powell. Investors are also eyeing U.S. services sector data for February, as well as factory orders data for January, that could provide further insight into the health of the U.S. economy. Meanwhile, locally, Nedbank recorded an 11% rise in its annual profit, supported by strong revenue and associate income growth. Nedbank's credit loss ratio, which is a measure of bad loans as a percentage of total loans, was up 109 basis points. This was from 89 basis points posted a year earlier and beyond its target range of between 80 basis points to 100 basis points. But the ratio improved from the first half when it was 121 basis points. For more on this, we are joined by CEO Mike Brown. Mike, thank you so much for your time. Let's have a look at the period that was for Nedbank and some of the highlights for you.
Yeah, thanks very much, and good afternoon, everybody. I think if we look back on 2023, we know that it was a very difficult environment in the South African economy. GDP growth at, I think, 0.6% is where it's come out this morning, which means that it's really difficult for many consumers and businesses, and at the same time, high levels of interest rates and high levels of inflation. So I think against that backdrop, we were particularly pleased in the way that we have managed Nedbank through that difficult part in the cycle. As you said, earnings were up 11%, but more importantly than that, earnings on a per share basis were up 15% as a result of a 5 billion rand share buyback that we did during the course of the year. The H2 dividend was up 18%, bringing the full year dividend also to be up 15%. And we met all four of the external post-COVID recovery targets we set ourselves for the end of 2023. So, while we know there's always more to be done, we'll be very pleased with the performance in what was a difficult external environment.
Speaking of that external environment, what are the conditions in the banking industry as you see it?
It's certainly a difficult period. Banks over time are reflections of both the economies that they operate in and then how well they've executed on their respective strategies within those economies. I think we're very fortunate in South Africa that we have a world-class financial services system. We have banks that are all strong and well capitalized, but loan growth is slow, largely because at higher levels of interest rates, consumers are much more wary of taking on debt, and retail loan growth was slow during 2023 and continued to slow into the second half. I'm sure it will slow into the first half of 2024 as well. On the brighter side, we do think that interest rates will begin to cut in the second half of 2024. We think will fall cumulatively by about 75 basis points through to the end of 2024. And again, that should start to put more confidence in consumers, and consumer loan growth will begin to pick up again. And then on the wholesale side, growth has also been slow generally, given the economic conditions, other than in private sector renewable energy generation, which has been a very, very strong growth vector and something that Nedbank has had a leadership position in.
When you look at those, as a result of those high interest rates, where is the most strain for consumers? Is it more on the home loan side or on the vehicle side?
It's definitely on the consumer side and less on the corporate side. And within the consumer side, it's in what we would call the mid to entry level market. So, think of somebody who's got one or two kids in school, they've got a car that they're financing and a home that they're financing. And within that environment, certainly we've seen more pressure in the home loans environment than the vehicle environment, largely because home loans would be a consumer's largest individual installment. And to digest 475 basis points of rate hikes into that home loan on a monthly basis certainly would have put a number of people under undue pressure. And we work really hard to keep people in their cars and in their homes in this difficult part of the cycle.
Are there key areas of the business where you are gaining profitable market share?
There are, and perhaps I would point to two of them that have been a real focus for us. Firstly, at Nedbank over the last 7 or 8 years, we've completely rebuilt our technology stack in the bank to build a modern, agile and digital tech stack. Off the back of that rebuild, we've seen very strong growth in retail main bank customers, up 9%. So there must be some market share growth there. And the key retail channel is the Money app, the Nedbank Money app. And users on the Nedbank Money app were up 16% period on period. So I think we've got a very good digital asset and a good growth story off the back of that. And then secondly, in that renewable energy environment that I spoke about, Nedbank has been at the forefront of government's renewable energy programs. And now we're right at the forefront of private sector renewable energy programs. And to give you a sense of that, we've got a committed pipeline of deals that will pay away during 2024 of somewhere just under 20 billion rand of new private sector energy generation, which is absolutely vital for South Africa to reduce levels of load shedding down to levels 1 and 2, which we can all manage with.
Looking ahead, what can we expect when we look at, net interest income and some of the key metrics that you keep an eye on?
Well, we think that our business, having delivered on all of our 2023 targets and produced double-digit earnings growth in 2023, is well positioned to continue to grow both revenue, earnings and dividends into 2024. Although I think something like net interest income will grow slower in 2024 than 2023, largely because interest rates are likely to remain stable and then reduce, so there'll be less endowment benefit. But that should be more than offset by bad debts in 2024 being better than they were in 2023.
You mentioned in your presentation that you're reaching the final stretch of your 14 years as CEO, and in total, if I'm not mistaken, it's 30 years at Nedbank. When you look back at your tenure and at your experience in the banking industry, does banking get easier and easier as you do it?
It definitely doesn't get easier. It gets more complex and more difficult, I think, every year. But that's the attraction of working in a bank. I've certainly always found it, unbelievably interesting. I learn new things every day. So it is an exciting environment to be.
Before I let you go, just quickly, I know that you're going to be staying on for a couple of months as an advisor, but what happens afterward? Have you thought about what the next plan is?
I haven't. I retire at our AGM on the 31st of May. So right now, I'm very focused on what I need to deliver before the 31st of May. We've got this set of results. We've got international roadshows. We'll have 5 months of earnings. And also on ensuring an absolutely seamless handover to Jason Quinn, who takes over from me. So that's absolutely my focus up until the end of May. I will then help wherever needed in that transition. And really for the balance of this year, probably take some time off to be with family, friends and loved ones who I definitely need to spend more time with than I perhaps previously had. And really think about what next for Mike Brown in 2025, not in 2024.
Mike, thank you so much for your time and all the best for 2024 and 2025, as you put it. That is Nedbank CEO Mike Brown talking to us about the company's results. But still within those company results, local retailer ShopRite continues to generate robust revenue and profit in what it describes as a challenging trading environment. Releasing their financial results, the company reported sales of 121 billion rand. That was up 13.9%. from the previous year. While operating profit hit 6.7 billion, that was up 8.1%. The company attributed its performance to its offering across its brands and support for its customers, both in-store and online, via the Checkers 6060 app. It noted that sales in the online segment rose by 63% in the period. The group added some 197 new stores, taking its total number to 3,543, adding that it created some 2,617 jobs in the same period. Shoprite shareholders are set to get an interim dividend of 2.67 rand. We're going to take a quick break, and when we come back, we'll have more news for you with Nompumelelo Siziba.